What if I told you that 2025 just wrapped up as the worst year for home sales in Metro Vancouver in over 2 decades? But at the same time, sellers listed more homes than ever before. That's not a typo. Low sales, record listings, falling prices, and heading into 2026, this combination matters a lot. Today, I want to break down the latest data from the Greater Vancouver Realtors and explain what actually happened in 2025, and most importantly, what this means if you're buying, selling, or sitting on the sidelines right now in 2026. Let's get into it. 2025 sales are historically low. It's the worst year for total transactions since 2008. So let's start with the headline numbers. In 2025, total home sales across Metro Vancouver came in at 23,800. That's down over 10% from 2024 and down 9.3% from 2023, and nearly 25% below the 10-year average. To put this into perspective, this is the lowest annual sales in over 20 years. This isn't just a slow year, this is one for the history books. But here's the twist. We have record listings. This is where things get really interesting. Despite buyers pulling back, sellers did not. In fact, 65,335 properties were listed on MLS in 2025. So that's up 8% from 2024 and up 28% from 2023 and 13% above the 10-year average. This is the highest number of listings since the mid-1990s, even surpassing the peak inventory levels that we saw back in 2008. So we had fewer buyers, more sellers, and inventory stacking up fast. It happened so quickly. The start of the year in Tsawwassen, there was around 85 homes for sale. That number more than doubled all the way up to 207 homes for sale in the summer. That's a recipe for pressure on prices, and that's exactly what we saw. We saw prices come down month over month in 2025. Now, what caused the market to stall? According to Andrew Lee, chief economist at GVR, 2025 came in with clear downside risk that unfortunately materialized. The trade tensions with the United States weighed on confidence, slowed decision-making, and pushed many buyers to the sidelines. Now let's talk about the good news. Those pressures started easing in the second half of the year. Consumer sentiment improved modestly heading into year-end, which is really what drives the market that we're in. But the damage to sales volumes was already done. Now, inventory levels heading into 2026, let's talk about what we're going to be seeing here. Right now, there's 12,550 active listings in Metro Vancouver. That's up 15% year over year, nearly 35% above the 10-year seasonal average. So what does that mean? It means buyers have options. So many options. Sometimes with buyers that I'm working with, it's too many options. They get overwhelmed with all the inventory. They say, we think that things are going to be coming down as well. So they're sitting on the sidelines. This is not a scarcity market. This is a selection market. Now, prices. They're softening across the board. The MLS Home Price Index benchmark for all residential properties is now $1,114,800, down 4.5% year over year, and this wasn't isolated to one segment. Prices eased across all property types throughout 2025, but what I see locally in Tsawwassen and Ladner, it really affected the detached housing market. Let's zoom into December specifically. Total sales in December came in at 1,537 homes, down nearly 13% from the last year and 21% below the 10-year seasonal average. New listings, 1,849 properties for sale, up 10% year over year and still above normal seasonal levels. Again, way more supply and fewer buyers. So what's the key metric? That's what we call in this industry the sales to active listing ratio, or the absorption rate. The overall sales to active listing ratio for December was 12.7%. Breaking this down, detached homes was 9.3%. As I mentioned, probably the market that's been affected the most. Townhomes, 14.6%, which is pretty good. And condos, 15.1%, which is pretty good as well. Historically speaking, below 12% is downward pressure on prices, and above 20% equals upward pressure on prices. The detached housing market right now is definitely in a buyer's market, and I would still personally consider that condos and townhomes are also still a buyer's market, depending on specific properties, of course. So detached homes in December, 431 sales, prices down 5.3% year over year. Benchmark prices just under 1.9 million. Apartments, we saw 791 sales, prices are down 5.3% year over year, and the benchmark price for that is now $710,000. Then we got townhomes, 303 sales, prices down 5% year over year. And the new benchmark, $1,056,000. So across the board, prices softened meaningfully in 2025. Now, what's going to happen in 2026 is a little bit different. Here's the part that people often miss. Sales and prices weren't the only thing that fell. Borrowing costs dropped nearly a full percentage point in 2026. So right now in 2026, buyers are looking at lower prices, lower interest rates, and more inventory than we've seen in years. On paper, these are definitely favorable conditions. The real question is, does demand return, or do buyers stay cautious and sit on the sidelines? That is literally the million-dollar question that we're seeing right now. For a lot of buyers that I've been working with for the past year, they're still sitting on the sidelines, and I don't blame them when they've seen house prices come down month over month for over 12 months in a row now. But 2025 was definitely a reset year. It wasn't a crash, definitely not a boom. It was more of a reset. So in 2026, we're also seeing the biggest mortgage renewal wall. What that means is that there's a ton of people that had fixed or variable rates back in 2021. Those people with a fixed rate sitting around 2% are going to be seeing their percentage for that rate double basically this year when they go to renew. So if you're buying in 2026, you have all the leverage. If you're selling, pricing and strategy matter more than ever. There's no point in overlisting a property if you know that the neighbor down the street sold for 1.5. If you're trying to get 1.6 and you have basically the same home, you're just wasting everybody's time. It's going to sit on the market for a long, long time. As always, I'll be tracking the market super closely and breaking it down as the data comes in. More and more videos coming out this year really quickly here. If you found this helpful, like, subscribe. I'll see you on the next one. I'm Blake Chancey. Peace.